All right. First things first, it is now the end of quarter two. So let's go ahead and check in on the trading account to see how we're doing. So I'll go ahead and grab a screenshot of that real quick. And you can see I did finish out the quarter with my goal, which was to be plus 50% by the end of quarter two. And you can see I am sitting here just above 52%. And my trade plan didn't work extremely well for the month of June. I did have a bit of a drawdown that I had to recover from, but I did close out year to date at a brand new all-time high. And with the S&P 500 and the NASDAQ 100 not at all-time highs, I do consider that a win, even though overall, obviously, I wish I did a lot better in June. Now, this is typical when you have a trade plan. You always have to be prepared for the times your trade plan isn't going to work and you have to manage risk. And as I always teach you, you have to be willing to move like water. And if something in your trade plan is not working, you cannot allow it to continue to erode your profits. You need to figure out why it's not working, and you need to adapt to what is currently going on in the price action and change your plan as needed, or at least manage the risk. So if your plan doesn't work, you don't continue to lose money. So I had a little bit of a drawdown I had to recover from, but I was able to figure out what I was doing incorrectly and fix it. And then, of course, with the recent volatility, we were getting lots of trade ideas, and every single one of those trade ideas started to print, which obviously helped me finish the month at all-time highs. So it's very important when you are trading that you're very, very flexible, and that's why I always tell you to move like water. You have to remain objective, and if your plan is not working, you have to go objectively figure out why it's not working. And sometimes a plan will not work and you will lose money, but the goal is that if you are managing risk correctly, your wins will outweigh your losses, and your account should continue to look like an equity curve that is moving from the bottom left of your screen to the top right. And as long as it is moving to the top right, nobody can tell you what performance you need to be having. Trading is a journey between you and yourself, and you need to understand what your goals are, what the risk you're willing to take are, and how you are going to reach your goals with your trade plan. So I'm happy with my performance. I do think I could have done a lot better, but we're always going to have room for improvement. And by the end of quarter three, I want to be at 75% to continue my goal to hit 100% by the end of the year. Now, I will remind you, I do believe a lot of volatility is coming up, and that will make for lots of great trade ideas, and those will be in my Discord server. So if you want to join my Discord server and get access to those trade ideas, you can find out how to join my Discord server in the link in the description of this video. All right, so looking at the SPY daily chart, I do believe there is a good chance this will end up being a bear trap, because very simply, this looks like the most obvious double top that I have ever seen on a daily chart, with just one candle going from the top of the range to the bottom of the range. It is very easy for a bear to take this trade assuming it is going to break down, but I teach to not assume anything is going to happen. I do not want you trying to guess that we're going to break down. If you want to short this market, and if you want to call this a double top, you are going to need to patiently wait for price action to prove this is a double top, which means we will need to break down below this neckline. I see so many bears getting this wrong over and over and over again for the past 2 years, because in 2022 we were in a bear market and you could just blindly short at any resistance because the trend was going lower, and eventually you were going to make money doing that. However, those old habits are dying hard because those retail bears from 2022 continue to short everything that looks like a double top in a bull market. This is now a bull market, which means it is likely going higher, which means all higher lows are going to end up being higher highs, which means buying the dip is going to continue to work until the bull trend is over with. And that is why I continue to tell you it is a bull trend until it's not. And of course, the trend is your friend. There is nothing on this chart that tells us that we are out of the bull trend. The only way we are going to get out of the bull trend is price action breaking down through a very critical support zone with lower highs and lower lows to tell us that we are now in a downtrend. If I look at this chart, I see the potential of a double top, but this is not a double top unless we actually break down to a lower low, and that confirms that we have a double top rejection from 550. We're breaking down below the neckline at 542. And that would validate our price target. That would tell us we're going down towards that gap fill at 537. So yes, this is a possibility, but there is no way that I would ever short this market unless we actually do see price action breaking down below the support. And that is how you follow price, and that is how you let the price action do all the talking. If you went short at the close on Friday, there is a very good chance you just got bear trapped unless you get lucky enough to have the market gap down below this neckline and confirm the double top. So yes, if you're short, there is a good chance you just got trapped, because what is likely going to happen is that we are going to gap up. We are going to get no confirmation that this is a double top. The bears will be trapped in the position from Friday's close, and we will likely start marching higher by the end of the week to finish at a brand new all-time high right around 555. So I'm telling you right now that I think it's a bear trap. There's nothing on the price action that tells me I'm wrong unless we gap down and price tells me I'm wrong. Then obviously I'm going to manage risk, and then likely I will try to short the market lower. But I do believe the highest probability chance in this bull trend is that the bears just got trapped and we're about to rip their faces off. So look for a face ripper next week. It is a holiday week. There's going to be very light volume. Lots of big money traders are going to be on vacation and enjoying their holidays, and they're not going to be in here selling and trying to short the market. And you are going to likely get a melt up into a face ripper. Once all of the short sellers start to get squeezed is when you're going to get the face ripper. So a low volume melt up into an end of week face ripper, I do believe is in the cards. And the only way I'm going to be wrong about that is by price proving me wrong by confirming this double top. And in that case, we'll be looking for the target at 537. So again, I just gave you a very simple trade plan. You don't have to agree with me, but that is exactly how I think this is going to play out based on price action alone. So we know how we trade to the downside, and we know the highest probability chance is that we continue to the upside, and your trade plan should be prepared for that. Or if you disagree with me, go make your own trade plan. Just make sure you have a plan, and of course, you're managing risk. As I showed you in my year-to-date gains, there are plenty of drawdowns within my account, but my account continues to go to all-time highs, and that is how you know you are trading correctly, because it should not matter if the market is going higher or lower. Your account should be going higher. On the NASDAQ 100 triple Qs, we were down 0.52% on Friday, and I'll tell you the same thing I just told you on SPY. This is the most obvious double top in the history of the stock market, and bears are automatically sitting here thinking we are just going to flush straight down and go fill that price target at 468. And while I just said that is a very likelihood possibility, it is the least probable in a bull trend unless price proves it by breaking down below 474, which is going to confirm this is a double top based on objective price action and not guessing. So once more, I do believe the bears are going to get trapped here. We could continue a little bit lower, but the highest probability chance by the end of the week is a brand new all-time high at 493, with this double top being an epic bear trap that caused bears to impulsively enter short positions into the close on Friday just to rip their faces off by the end of the week coming up. So keep this in mind. The highest probability chance in a bull trend is that we go make that brand new all-time high. And the only way we are going to say that is not going to happen is if we confirm the double top, which of course all the smart bulls will manage risk, and we will likely flush down very quickly to fill that gap at 468. So be prepared for both of these, knowing that the all-time high is the highest probability chance because it's a bull trend until it's not. In the Dow Jones, we were down 0.11% on Friday, and the Dow Jones looks extremely bullish right now. We just got the crossover of the 20 back above the 50. All of these moving averages are now supporting the bull trend. The price action has just built a base of support at the breakout at 389. The bulls are accumulating and getting ready for a very strong rally. The Bollinger Bands are squeezing, which tells us we're about to get a lot of volatility. And a lot of that volatility in that squeeze is likely going to be on the bull breakout with the newfound bull trend all the way up to 402. So once more, I will warn you, if you are bearish on this market, you are likely about to get squeezed out of your positions as the Dow Jones goes on a face ripper to a brand new all-time high. I'm wrong if we break down below 389, and that is a very low risk trade because if you're a bull buying at 389, you know exactly when you're wrong if we break down, and there is a ton of reward to the upside, so that is a trade I would take 11 times out of 10. So I don't typically trade the Dow Jones, but it is hard to deny that this is a very juicy setup for the bulls. On the Russell 2000 IWM ETF, we were up 0.41% on Friday, and just like I said about the Dow Jones, this is looking extremely juicy for the bulls with the price action back above all of the moving averages. All of these moving averages are now all bunched up for a confluence of support right around 201, and I do believe it is going to be a good idea to have small caps in your portfolio for what could be another face ripping rally building up here on a bull breakout above 203 to 204. And you can see the bulls are already trying to do that on Friday, but we did have this gap to fill, and we did need to retest that those moving averages would bring in buyers, and this was the only index that closed in the green on Friday, and I do not believe that is a coincidence. There will be people chomping at the bit to get into IWM at these low risk entries, because even if this ends up going lower, it is very low risk to be bullish here. And I think you could just stay bull while we're above 200, or if you want to get even more risk, just stay bull above 198. So if you want confirmation, just wait for the break above 204, and then I do believe we're well on our way towards 214 and higher. On the ARKK ETF, we were down 0.14% on Friday, and overall we're still risk off in a bear trend below 45, so we are still looking for lower highs and lower lows unless we get back above 45, so let's just keep it as simple as that. On the VIX, we are up 1.63% on Friday, and I was saying as we got down here near 12, this is where you could get very, very cheap hedges, which is 1 put per 100 shares. Again, we're in a bull trend, so we're not looking to go crazy with puts. The market's likely going higher, and puts are likely going to expire worthless. However, while the VIX is low, you can get some cheap hedges, so just keep that in the back of your pocket. On Bitcoin, we are currently trading right around 61,000. We are struggling to break down below the 5 EMA, but I do believe a lot of the selling pressure is drying up here between 58 and 61,000, which means we could still bounce higher to the negative 20 moving average and go hit that target at 64,000. Now, if you're long Bitcoin and we hit 64,000, I would go ahead and lock your profits because we are still in a downtrend, and that could be a lower high before the next lower low. So you have very clear risk levels here. You could use 58,000 to be bullish. You could also be bullish above 60,000 and use that as your risk level. And then the resistance for the bears is a risk level up here at 64,000. On Nvidia stock, we were down 0.36% on Friday, and this is going to be a very critical decision for this stock at 122 with all of the moving averages converging right around 124. We are either going to continue this lower high rejection for a very sharp drop lower towards 115 to about 107, or the bulls are going to show up at support and try to push us for a brand new all-time high, or at least a push into the low to mid 130s. So this is a very easy chart as long as you understand the bulls still do have control above 122. You are only getting bearish on Nvidia if price action breaks down below 122 and confirms this as a lower high rejection, and then that lower high rejection would obviously bring us down for another lower low and the next leg lower within this blow off top. Now above 122 we could still make a brand new all-time high and continue to blow off the top, so just keep that in mind that I do not suggest being bearish unless we break down below this critical support. On Tesla, we were up 0.23% on Friday, and Tesla is continuing to close outside that upper Bollinger Band, so the sellers have no control here, which I told you you should not even be thinking about shorting this stock because we just had a bull breakout from a multi-week consolidation, which means all of the buyers and sellers agreed that this stock needed to go higher, and here we are going higher, so there's no reason to be shorting it. Now, if you want to short it, you can do what you want. It's your money. I just think it's a terrible idea. I think you would have a lot more enjoyment simply lighting it on fire and watching it burn, because above 197, we are likely going to 207, and then above that, I think we're going into the 220s. So stay bull in Tesla while it's above 197 or above the rising 5 EMA. On Apple stock, we were down 1.63% on Friday, and once more, as I told you with the indices, it does look very possible that these are all bear traps, and from here, you need proof that we're going lower by breaking down below this previous low right around 207, and then below 207, we likely go all the way down to 198. So I'm going to adjust the chart just a little bit here to make this very clear what I'm talking about, that the bears would then need to come break down below 207, and below 207 we should come all the way down to 198. However, the highest probability chance is that we find support and continue to push higher for another brand new all-time high. So again, this is a bull trend. That's why we're looking for higher lows and higher highs unless price proves otherwise, and if price is going to prove otherwise, we're going to need to break down below 207. So keep it that simple. I think you'll do very well as long as you understand how to follow price here. So jumping back over the S&P 500, it is going to be a short holiday week with very light volume. Within a bull trend, the odds favor we're going higher, and I do believe the bears just got trapped and they're about to get squeezed out of their positions. However, I remind you to move like water. So if I'm wrong, price is going to tell us that we're going lower by breaking down below support and confirming the double top. And if we confirm the double top, now it's acceptable to be bearish, and it's acceptable to be looking for lower prices because price action will do all of the talking and it will be objective. If you are shorting now, in my opinion, it is not objective. It doesn't mean it won't work, but you're taking the lowest probability chance and taking on the highest amount of risk, and continuing to trade in that manner will surely guarantee that you are never going to be a profitable trader. So you have to understand this is a game of odds and a game of risk management. You need to stack the odds in your favor and take the highest probability chance to win a trade. And while you are doing that, you need to manage risk so that when you are wrong, you lose less money than when you are right. and when you are right, you are making more money than you're losing. That is how you be profitable. There is no other way. There is no get rich quick scheme. There is no book you're going to read, and there's nobody that you're going to subscribe to their courses that is going to tell you a magical secret. This is blood, sweat, and tears of understanding the chart, reading the chart, and following the damn price. That is what I'm teaching you to do, and that is what we do each and every day on the Stocks Channel Discord server. So if you want access to all of my technical analysis, my intraday updates, and my trade ideas, that is in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.